Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Sonali, Basak in for Caroline Hyde, counting it down to the closing bell. Here to help take us beyond the bell, our global simulcast team. We're joined right now by Tim Stenovec, and in for Carol Masser, Ed Ludlow, EV Whisperer, joining us, bringing together our Bloomberg Television, radio, and YouTube audiences. Tim not wearing a tie, Ed wearing a tie, worlds colliding. What's going on? Markets down.
Yeah, market's down, and the NASDAQ really trying to eke out some sort of gain at the end of the day. But I think the real story is told in the number of advancers and decliners. For every one stock that's up in the S&P 500, there are 4 down. So it really speaks to the breadth of the decline that we're seeing. Magnitude is not huge, but still a broad-based decline, Ed.
Yeah, look, we're all surprised that yields are rising after that jobs report from last week. But the theory seems to be that if there's patience, the Fed doesn't go early, then we will see rates rise. The question, the debate, seems to be to what extent? Taylor. Yeah,
that's interesting, Ed, because there were some questions, and Romaine, we were having this debate with Jason Brady of Thornburg of why yields are going higher off at the back of that report, but how much of this is perhaps maybe a slowdown in this taper, and so you're letting inflation and some of those inflationary pressures perhaps maybe run higher than we thought.
Yeah, and I think whenever we talk about this, I think you have to point people to the yield curve, that steepening yield curve, 5-year 30 right now at about 115. It got up to about 117, but if you pull that chart back and you look at it over a 6-month period or even a 1-year period, you realize, okay, we got a long way to go before we get back to any sort of right sizing in yields here. About 13 seconds till we get the closing bells here in New York. Look, people are clapping, bells are ringing. The Dow Jones Industrial Average looks like it's going to finish the day down by about 64 points here. Not on a day like today. You're down 0.7% on the Dow Jones Industrial Average. Everyone pays attention to that. The S&P 500, that's down about 0.3% or 15 points. We should point out, still camped out near its record high. The NASDAQ actually going to close today at a record high, believe it or not. It's only up about 0.1%, up about 11 points, 15,374. That's the NASDAQ composite we're talking about. And the Russell 2000, that's your underperformer of the day. It's down by about 0.7%. In fact, a lot of that cyclical trade that we've been talking about, that's really been the big laggard here. Not only is the Russell down about 0.7%, but the mid caps, the S&P 400 down about 1% on the day.
Yeah, we just spoke to Dave Dietz, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management. And he made the point that on a day like today, you really have to step back and just think context here and say, hey, wait a second, look at the volume that we had on Friday. It was low. Traders seem to still be digesting the jobs report that we got that day. And wait a second, let's not get ahead of ourselves, he says. We're seeing a record high on the NASDAQ, and we're really close to record highs on the Dow and the S&P 500, Taylor.
Tim, let's take a look at the context of which we do the individual sector level before we get to the individual movers. For our radio audience, as we do this, the sector winners and the sector losers. And I hate to say it, but there is a lot of red, even in the sector winners. But there are a few standouts, some of which are tech and media. Of course, those are up about 1%. How much of that is some of the Apples, some of that defensive trade coming on? And autos are up there as well. We do this for you, Ed, because autos are up 2%. How much of that is some of the moves? And you nailed it on this story with the likes of Ford and Tesla, you name it. We go down to some of the individual losers as well, and it's sort of a broad base here. You could call it a rotation out of some of the bond proxies, real estate, utilities, food and beverage, capital goods. Those are off anywhere, Ed, from 1.2 to 2%.
Yeah, I'm looking at the big gainers. Actually on the NASDAQ 100 and feeling the love with Match.com. Announced Friday, being included in the S&P 500, of course, marrying up those investors, institutionals that have to buy the stock. Yeah, I know, I'll give you that one. Also looking at Moderna is down earlier in the session, of course. Dr. Fauci saying that a delay could mean that Moderna doesn't feature in that round of boosters. Pfizer go first, but the stock coming back, ending higher in the day. And then Netflix, 8 straight day of games. There's no real sort of hard news around this other than Seinfeld's coming, guys. I don't know if you're ready for Seinfeld. I certainly am. Okay. I feel like I missed out. But Evercore out with a holiday weekend survey saying that this is front and center for a lot of consumers right now, Tim.
That's like 30 years. Are they bringing back Sanford and Son?
And there was the the new street high.
Can I just point out before Tim, you get all gloomy with your decliners here. We should point out that you had more than 100 stocks, at least in the big cap universe here, actually hit 52-week highs today, including Netflix and Apple. Now there you go. There's your red on the screen. Take us down.
I'll take it down. Yeah. Well, Boeing shares under pressure today. This coming off of a couple bits of news, including the news that Ryanair has ended the negotiations with Boeing on a major follow-on order for the 737 MAX. This after they failed to agree on pricing. Boeing shares down 1.8%. Also, the news from Dow Jones over the weekend that the 787 Dreamliner is likely going to remain halted at least until late October. That certainly didn't help at all, but off the session lows to finish down 1.8%. PPG Industries also down 3.4%. It withdrew its 2021 financial guidance. This as supply chain disruptions drag on sales and higher raw material costs hurt profit. The company did say it increased prices about 5% this quarter, but it expects 2022 sales to be strong when the supply chain pressures actually ease. Coinbase, we got to talk about Coinbase down 4.1%. Under pressure on the day that we see that Bitcoin is under pressure and other cryptocurrencies are under pressure. At the same time, the company did report earlier that some transaction on its platforms are either, quote, delayed or canceled at elevated rates, Romaine.
108 stocks hitting 52-week highs. 5 hitting 52-week lows here. So that gives you Hormel Foods and Boston Beer, Taylor.
Size and scope is
value
for
add.
one Romaine.
That's value add, man.
Bostick, you
don't get that on the European
Sonali is value add with crypto, which I know that we want to touch on. In the meantime, let me just quickly diverge us and take us back to the yield market, Tim, because this really does highlight where some of the movement was today. You're up 4 or 5 basis points across the curve to an 82, a 137, and a 199. So how much are we breaking through some of the key technical levels on the 10-year and approaching now, finally, again, at 2% on the 30-year? And Sonali, this really brings up this sort of theme of inflation, higher yields, rotation, and a lot of the technicals when you think about supply coming into the market.
Right, and if you think a lot of the market moves were already priced in, Taylor, I've got to point out that the VIX, while nobody was looking, rose more than 8% today.
I have a question, though, and I don't know, this is an open question to everyone here, but I mean, with the yields rising, how much of that has to just do with some of the short-term issues with the supply coming in and just the knee-jerk reaction to that job support? I mean, is this really sustainable?
In our conversations all day, Romaine, a lot of this has been a lot of talk around the taper timing, the belief that that will come sooner, but you're right, there is that added pressure that people are not talking about as much.
Yeah, and look, it's also the concerns about inflationary pressure. I mean, like we saw from PPG Industries today. We know that the Fed is really only concerned about the jobs numbers, and they were such a miss for the last month. And there's not too much data that the Fed is actually going to get in the coming weeks before that September meeting, Ed.
Yeah, look, we're all surprised about one data point driving yields higher Monday, one shaky data point about the recovery. But if you read across Wall Street notes, it's not just one data point that makes an outlook. You look at that forecast cut from Goldman. They're picking out consumers as well. So many different things to watch for. And that's why the calendar is so important for the rest of this week. All
right, well, we got to talk about another story here. And this was a story everyone was talking about this morning, the commentary by George Soros, basically criticizing BlackRock's sort of embrace of China. This idea here that there are a lot of risks out there on the table with China. BlackRock says those risks are opportunities. Soros says you have to be crazy to continue sort of moving down this pathway. And he actually went as far to talk about you're putting clients' money at risk. Ed, you've got a tie on. What do you think?
Well, look, this is also about opportunity. He makes it seem as if there's nowhere to go in China. If you look at venture capital flows, record levels going into Chinese robotics firms, Chinese semiconductors. Look at the MSCI Asia Pacific, IT versus communications. The money's being pulled out of stocks like Tencent, NetEase because of these concerns. But it is going somewhere else because we know that Xi has this very big focus on industrializing the economy, and that brings with it opportunity for investors.
Really interesting comments that we're getting from veteran EM fund manager Mark Mobius. Take a listen and let's react on the other side.
I've been pretty positive on the measures that China have been taking because it means that they're moving more towards fairer regulations, trying to create a level playing field. So in some ways, these measures by China is making it safer for investors, including foreign investors. So I don't see where George Soros is coming from on this regard.
And Sonali, I mean, really interesting comments when you talk about, fair regulatory practices, and yet some of the headline risk that some people aren't going as far to say totally uninvestable, but you have to be very careful in that market.
Very careful, but we can't take back the fact that so many of the world's billionaires are based there. There's huge money managers, sovereign wealth type companies, insurance companies that are ingrained with Wall Street.
Yeah, and I mean, I guess this has to do a lot too with how conservative of an investor you are. Obviously, Mobius is a guy who sort of, cut his teeth, basically going into places that the rest of investors were sort of scared to go. And obviously, BlackRock. I mean, look, they'll be fine, right? I'm pretty sure BlackRock will be fine.
Yeah, I'm not concerned about them, but it does remind me of what Cathie Wood said last week about her investment in China and the way that she sees an opportunity, especially in those second tier and third tier cities and companies that serve those second and third tier cities as an opportunity for growth, considering that she is trying to level the playing field. Guys, we're going to have to leave it there. It's going to do it for our cross-platform coverage for today. We will be back again tomorrow at the same time, same place on Bloomberg Radio, on YouTube, and on Bloomberg Television.